Hello, hello, hello. I'm Erin Aid. This is my partner in crime, Mr. Edward Harrison, and we'd like to welcome you to a very, very special episode of Boom Bust. This is Boom Bust's very first panel debate, and what better topic to debate than gold? Let's get to it. Welcome to the show. Now, we all know that gold is a highly sought-after precious metal, and obviously not just for ornamental purposes. The first use of gold as money occurred around 700 BC when Lydian merchants produced the first gold coins. In fact, gold has always had this special place in humans' hearts, even before it was used as money, and this is clear when you look at the extraordinary lengths that people will go to obtain it. And that's why we decided to make an extraordinary effort of our own to better understand it, and the incredible panel of talent and insight that we've amassed today is going to help us do just that. Here they are. First up on the pro-gold side, we have Peter Schiff. Who else when you're going for pro-gold? Peter is CEO of Euro Pacific Capital and a physical gold dealer. And in 2012, Peter said that the price of gold would rise above $5,000 an ounce. That's a troy ounce within the following 2 years. And as of today, September 25th, 2014, gold is trading at just over $1,200 an ounce. So, Peter, we're going to have to hear what you have to say about it. Next, Rick Rule. Rick is director, president, and CEO of Sprott Holdings and has dedicated his entire adult life to many aspects of natural resource investing. So he knows a thing or two as well. Now we're moving over here and fighting for the anti-gold side, or at least the more gold-neutral side. We have Marshall Auerback, the wonderful Mr. Marshall, and Cullen Roche right behind me. Now, Marshall is a director at the Institute for New Economic Thinking and a former fund manager with over 20 years of experience in investment management, including a stint managing a gold fund. So he definitely knows what he's talking about. And finally, the wonderful Cullen Roche. Cullen is founder of Orcam Financial Group, and he's also a Boom Bust regular. And he's also a former wealth management and runs the blog pragmaticcapitalism.com. And he recently released a book by the same name. Now, let's get to it, and I want to start off this debate with the history of gold, and I'm going to direct my very first question at Peter, but I want to say to all the panelists, please feel free to chime in at any time. This is a debate. We want it to get a little scrappy, so say what you feel. Peter, I'm expecting you to live up to the scrappiness request. So first and foremost, why through the millennia have people always used gold as money?
Well, I don't think they've always used gold, but I think gold has been used as money for a long time. And it basically won the free market battle as to which commodity could best serve as money, because there's been a lot of commodities that have functioned as money, but gold has some very unique properties that make it, satisfy that function much better than other commodities that have been used in addition to gold.
Marshall, I'm going to toss this one over to you now. Now, during the Great Depression, countries that adhered to the gold standard the longest performed the worst economically, the worst, worse than sterling bloc countries that went off the gold, and worse than the Eurozone since 2008. So, Marshall, let me ask you, why do you think that is?
Well, because it's the case that if you are dealing under a gold standard system, then obviously your fiscal and monetary officials have limited scope for manipulating policy or expanding stimulus in the event that you have a huge exogenous shock like we had in the 1930s, and indeed that we had during most of the a lot of the 19th century. You had 5 depressions during the onset of the gold standard. And in fact, it was only after FDR devalued the dollar against gold, effectively severed the link, that he was able to implement some of the stimulus that became the basis for the New Deal. Although I will say, in Peter's defense, that he's right. As far as the commodity dynamics of gold go, they are unique and probably made it a logical basis for the choice of money in an earlier era.
Now,
you know, I'd have to disagree with you, saying, because I think what happened during the Roosevelt administration, that worsened the problem. The beauty of gold is that politicians can't meddle in the economy. It's what central bankers have done with fiat money that is responsible for the problems that we have. Economies have done much better under a gold standard than with central planners manipulating the economy through a printing press.
Well, central planners, that's a very emotive term. You know, the only thing I'll say is from 1932 to 1936, U.S. industrial production rose 62.5%, which is the highest on record. Unemployment, if you calculate it correctly, went from about 25% down to just under 10%. So, you know, I don't know what statistics Peter is looking at, but I would say that's a pretty good
Look at the period
record.
Between the end of the Civil War and the beginning of the First World War. That economic growth rate is unmatched at any point in U.S. history.
Now, here, I want to move on to this. Ed, I'm going to let you toss to this one, and we want to direct this at Peter, too. We're going to play you a shot from Nixon. So,
yeah, let's play a clip from Richard Nixon back in 1971.
I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
So that was Richard Nixon taking America off of gold. And now, since the U.S. went off gold in 1971, I'll direct this both to Rick and Peter. Credit growth in the U.S. has soared, and we've had a huge number of crises. Do you think this is just a coincidence?
If I can start with that. I feel more needed. I felt at that point in time more need to be protected from Nixon than I did the speculators. In fact, I emigrated to Canada at that point in time as a consequence of the actions of Mr. Nixon and his successors. So the idea that Nixon was going to protect me or the United States from anything, on the face of it, is laughable. Returning back, I guess, to the subject. One of the things that I find interesting is that there is a suggestion that somehow the speculators were responsible for the demise of the dollar. The speculators are responsible for the fact that a room at Motel 6 is now $69. The truth is that the people like Nixon and his ilk have done a better job destroying the dollar as a consequence of it being a credit rather than a money than any cabal of speculators could ever have done. And hence, the attraction of people with regards to their individual wealth for gold. I am familiar with the argument that unbridled abilities of governments to create credit can benefit some parts of the economy. I'm looking at it from my client's point of view, where what they are looking to do is defend their savings, which are, after all, the fruits of their labor over time, from the depredations of government. I'm looking at it from a very different point of view.
Yeah,
I want to jump in here.
To facilitate the strength of the center.
I want to jump in here because we have another, pretty popular quote here from Warren Buffett, and this is going to be our last one that we're going to play for you, but I want you all to listen to it. And Colin, you got to get in here too, so let's hear this.
If you buy an ounce of gold today and you hold it 100 years, you can go to it every day, and you can coo to it, and you can caress it, and you can fondle it, and 100 years from now, you'll have 1 ounce of gold, and it won't have done anything for you in between.
So here we go. The question here is, why should I or anyone own gold if it's not a productive asset and it's not interest-bearing?
Yeah, let me first go back to what even Nixon said. He said he wanted to protect the dollar. He didn't protect it. He sacrificed it, because when Nixon became president, you can buy an ounce of gold for $35. Now you need over $1,200. But to address Warren Buffett's point, if I bury an ounce of gold in the ground today, and I also bury a $100 bill right next to it in the ounce of ground, and I dig them both up in 100 years, which one is still going to have value? That is the point. You don't compare gold to a company. You have to compare gold to alternative forms of money in the form of dollar bills or euros or yen. And what do you think is more likely to have value in 100 years?
That's not a very fair comparison, though. Peter, that's not a very fair comparison. When you look at
Yes,
the value
it is.
of the
It's
dollar,
comparing one form of
you
money
have to
to
compare
another.
it to the real wage rate. When you look back, say, to 1913, the real wage rate in the United States has expanded dramatically higher
No, it
than
hasn't.
the
Not
rate
in
of
terms of
inflation
gold. People
has.
make less money today in terms of gold than they made.
You're telling me that people are worse off than they were in 1913 in real terms. I mean, I find that very hard to believe by any real measure.
No, technology has improved people's lives. But look, the stock market today is worth, in 1929, the Dow was at 20 ounces of gold. And what is it today, 12 ounces of gold? But you can look at all sorts of other prices and wages, and you can denominate them in gold. And yes, people are worse off, certainly after taxes, which didn't even exist 100 years ago. So people now have to pay all these taxes they didn't have to pay. But people were able to support a family on the average wage, even people that didn't go to high school.
We see this statistic all the time.
Colin, I'm jumping in here. Colin, you wrote a post saying Warren Buffett is right to hate gold. This came out just yesterday. Why is he right?
Well, Warren is referring to gold from an investment perspective, and I think that when you construct a portfolio, it just doesn't make a lot of sense to place an unproductive asset as the central asset of a portfolio. I mean, gold, it has some productive elements to it, but for the most part, gold is viewed as a form of money. It's viewed as really an insurance sort of policy. It's a hedging mechanism. And it makes no sense to construct a portfolio around an unproductive asset that is primarily a hedging mechanism. I mean, I think to some degree, it's fine to own gold if you have some sort of worries about the dollar, you want to hedge your portfolio, maybe you're worried about high inflation coming or something like that. But as a central component, I think that Warren is making an important point that it makes no sense to construct a portfolio around an unproductive asset. And that's really the key point that Warren gets to. He compares it to real commodities, things that actually produce something. Gold is not like a barrel of oil that actually has an end output. Gold is just gold. It sits around and it looks pretty and it serves as a rock that maybe maintains its purchasing power as long as people think it will maintain its purchasing power.
So you think gold has absolutely no use?
I'm not saying absolutely no use.
Let me ask this question towards Rick. Cullen just mentioned insurance. A lot of people think of gold as insurance. An insurance against what, though? What is gold insuring us against?
Well, that's one of the things that I regard it as. I think there's probably less dispute among this panel than we make on. I think we're engaged in some semantic difficulties. I do regard gold in my own portfolio, my own physical gold, as the ultimate form of cash. Perhaps if I was as smart as Mr. Buffett, I could find a way to hedge my wealth against the depredation of the dollar and the destruction of my purchasing power by the government in some more efficient fashion. But the truth is that gold has, in fact, held its own in terms of purchasing power over time. And I regard it as a cornerstone asset in people's attempt to maintain their purchasing power. Basically everybody that's party to this debate has said the same thing.
Rick, I'm sorry to cut you off.
I'm not suggesting that it be the entirety
we got to
of the
go to break,
portfolio.
and I'm going to let you lead coming out. Here.
The cornerstone of a portfolio.
You got it done. Well done. All right, we have to go to a quick break, but don't go anywhere. I'm losing control of my show. But when we come back, our amazing panel is sticking around. And when we return, we're going to be discussing the politics of gold and gold as an investment. A lot to learn there. Come on back with us.
What are your thoughts on what's been going on in Washington?
Well, it's a mess, Larry. I mean, the whole country is being scoffed at and laughed at.
Enough is enough.
The media, the candidates, the corporatocracy, covering issues that actually affect you and me doesn't do too much for ad revenue.
Biotech agriculture giant takes on a 76-year-old American farmer based in Indiana.
How much fallout do you think this is going to create for the CIA?
Do you think this is what's triggering the crisis?
America's the largest economy in the world. It's also the largest debtor nation in the history of the world.
Breaking the set is mostly about alternatives to the status quo, but one that gave real alternatives a voice.
One minute they were working toward the American dream, the next they were just trying to survive the night. It's time for Americans and lawmakers in Washington to wake up and start talking about the real causes of poverty in America.
You know that guy who wishes someone would spy on him? How about the woman who enjoys being lied to by her government? This citizen can't get enough congressional inaction. And this taxpayer wants the mainstream media to be more corporatized. While this person would rather eat genetically modified food, this one thinks our prisons are not crowded enough. And what do these people have in common? They don't exist.
Welcome back to the show. Now, you're watching a very special episode of Boom Bust. We've amassed a spectacular panel to discuss and debate one of the oldest forms of currency, gold. So let's dive right back in. And Rick, I said I'd just come to you, but I lied. I'm actually going to Marshall. Now, Marshall, Germany, the Bundesbank, they recently said that they want their gold back. And by that, I mean they want their gold back from the U.S. Fed, more specifically the New York branch of the Fed. But, you know, a lot of people say that the Fed doesn't have the gold, they sold it, et cetera, et cetera. Does the Fed have Germany's gold?
You know, it's possible they don't have it. I mean, I am very attuned to the debates as to you know, what has or hasn't been done in the gold market. And you know, there's been organizations such as GATA. We're all familiar with the arguments. And you know, I don't find it particularly shocking if the central banks have been mucking about in the gold market. I mean, after all, they've been intervening in virtually every other market, as most of the panelists here would agree. So I don't think that's a great mystery. Clearly, you know, if the Bundesbank wants to have its gold back, that's fine. I don't know if that means that it's going to be that will be preceding their decision to get out of the Eurozone, but you know, that's a call for them to make.
Rick, should we return to the gold standard? I'm going to go right to you with this.
Yes, I mean, we never will. There is no way that elected politicians will ever agree to a set of circumstances which will limit their power to rule as opposed to lead us. And a return to the gold standard would mean that we absolutely limited their ability to, as you said, muck about in the economy. So yes, we should do it, and no, we won't.
Colin, do you agree with Rick?
Well, I agree with him that we're not going to return to a gold standard, but I don't think it would be a smart move either. I think we kind of know. We know what a gold standard does. We know what fixed exchange rates do. I mean, you can look at Europe. To some degree, Europe today is a fixed exchange rate system where they have no floating free exchange of the currency, and the governments are not unconstrained in their ability to print the currency. So it creates these natural trade imbalances within the currency system that is just, it wreaks havoc on the...
what they've created in Europe to a gold standard. Under a gold standard, a lot of these governments would have defaulted. There would be no bailout facility. There'd be no ECB printing all this money.
Which would have been disastrous. So that just would have caused a modern-day depression. I mean...
No,
but you implied that that's somehow good, that we should just go through
the depression was not caused by the gold standard. But, you know, one thing, I will disagree with Rick. I do believe that we're going to end up back on a gold standard. It's not going to be because politicians want to. That's the last thing they want. But eventually, when we have a dollar crisis, they're going to have no choice. I think the world is going to be moved back to a gold standard. It's going to be done by force. We'll see what happens in Switzerland in November, because they might be moving in that direction.
Peter, can you put a time frame on that?
Proposition coming up.
I mean, we've been hearing this message from hyperinflationists for what, decades? I mean, I've been reading about the coming hyperinflation forever. No. Literally since
no, I haven't been saying it for
I've been reading from shadow stats and other firms about how hyperinflation is coming, and it'll never come.
Colin, he brings up a good point about Switzerland. What about backing the currency with gold instead of actually going to the gold standard? This November, the Swiss are voting on whether to prohibit gold sales by the central bank and whether to mandate that the central bank's asset be at least 20% backed by gold. What do you think of that?
I mean, I think that the more that you constrain the ability of the currency to float to some degree, I think the more likelihood you have of these recurring imbalances. And we see this, we saw this during the Great Depression. We see it in Europe today, where these trade imbalances occur because of these specific constraints. And I think that you have to have some level of free-floating exchange between
But the currencies aren't floating. They're sinking. They're being debased. Governments are manipulating these money supply. It is a detriment to economic growth and health. That this is the biggest problem we have in the global economy, is what these central bankers are doing.
You can't, by definition, have all currencies sinking all at one go. You can't have, I mean, and the reality is,
they can all sink collectively in purchasing power. Actually, yes, they can.
Peter, I want to ask you, Peter,
Peter's right.
Which central banks are accumulating gold reserves right now? You tell me.
Well, I would imagine that the Chinese are buying a lot of gold, and they're not being forthright about how much they're buying because they want to buy a lot more. And I do think that Asian central banks, emerging market economies, these are the ones that are loaded up with paper reserves. If you look at the European economies or even the United States, our primary reserve is gold. We're not loaded up on other fiat currencies, but it's the emerging markets who have all the productive assets, who have been producing and running enormous trade surpluses. They have been accumulating their surpluses in IOUs of other bankrupt Western economies. And I think they're going to see the danger of that, and they're going to be buying more gold.
Marshall, Paul...
I disagree with that, actually.
Oh, go ahead, Rick. Step in there, please.
I disagree with it in the sense that thinking about the four of us, if we were central bankers, by our nature, we would believe in central banking. Gold acts as an instrument to shield savers from the follies of central bankers. And I think that central bankers are, by and large, predisposed against gold because it calls into question what they do. Gold, as JP Morgan said, is money. Everything else is credit. And these people believe in credit. They don't believe in money. Represented by something that is an asset without simultaneously being somebody else's liability. That's not a very subtle distinction. It's a very broad distinction. So my own belief is that central bankers are attracted to gold as an asset of last resort. It's individuals, it's savers, it's the productive members of society, not the saprophytes or the parasites
Rick,
that believe in gold.
Rick, are central banks or anyone else for that matter manipulating the price of gold right now?
You know, I don't talk to many central bankers.
You and Greenspan, you're not hanging out all the time.
They wouldn't tell you. They wouldn't tell you even if they did. If you were, Rick. I mean, I've spoken to them and I put the questions in point blank.
I was being facetious.
Yes, no, I understand that. No, but they all lie about it. I'm sure that they have intervened. In fact, you know, we have a lot of evidence. After the Ashanti episode in the late 1990s, whereby you had companies that were playing in the gold derivatives markets. Eddie George later on explicitly did admit that the central banks were forced to intervene because there was a very serious problem, and a lot of people speculate that that's one of the reasons why the Bank of England pre-announced a sale of gold to help bail out one of these companies. So I have no doubt. I mean, there is ample circumstantial evidence to suggest that they've been intervening for years. That hasn't stopped the price from rallying from time to time.
They certainly have a reason to do so.
Now,
they're highly motivated to get the price of gold down.
And they have the ability, assuming that they have the stocks of gold that they do, it's much easier to manipulate. So I suppose if you're in favor of a free market in gold, the best thing you could hope for is that they continue to manipulate it and sell it out and try to keep it down, so that ultimately you'll get your $5,000 price target, Peter.
Well, speaking of price targets...
by the way, I never put a time constraint on that. I'd be curious as to see a tape of me saying 2 years for 5,000. I've been saying 5,000 for a long time.
You can never be wrong.
Well, I've been saying it for a long time, but I've never put a time date on it.
Well, speaking of price targets, actually... Marshall, Paul Brodsky and Lee Quaintance, they did a piece on what they called a properly administered currency devaluation. And their analysis shows that if the U.S. returned to the gold standard, it would actually have to do so at a baseline of almost $10,000, which is more than 8 times what it's trading right now. Do you think that's true?
Look, Paul, full disclosure, Paul and Lee are friends of mine. I think they're very smart guys and very thoughtful on the subject, and I suspect their analysis has a lot of merit to it. Clearly, the stock of gold relative to the stock of money is so tiny that if you were to contemplate going on some sort of gold-based standard, and I agree with Cullen, I don't think it's a good idea, but if you were going to contemplate, you'd have to revalue gold to such an extent that I think it would be something close to what Paul and Lee suggest.
How do you explain the success of the United States during the 19th century? If a gold standard is such a problem, how did we succeed so spectacularly during that time period?
We had 6 depressions during the 1800s. I mean, people often hail this era as this huge boom in the US economy.
Throw out what you consider to be the depressions, as brief as they were. Look at the increase in living standards. Look at how we were able to absorb tens of millions of immigrants, how we transitioned our economy from an agrarian to an industrial economy. Look at the
we were a very different economy back then. I mean, we were basically an emerging market back then.
You guys, I want to ask you about investing with all of this now. And Peter, this is a good one for you, but I'm going to actually throw this question at Colin. Colin, gold is down 10% from its 2014 high and almost 40% down from its all-time high. So why is gold declining?
Well, I think that a big part of it is that a lot of people have been pumping up this idea that quantitative easing and the government's deficits were going to cause this hyperinflation or the high inflation. And I think that the price of gold got pumped up in recent years in large part because of that belief, because people thought they needed to hedge against the coming high inflation. And I think that the last 2 or 3 years are a sign that people are slowly realizing that all of those predictions were wrong, that for whatever reason, quantitative easing didn't cause the hyperinflation. It didn't cause the high inflation. And so you're seeing just a price reversion from what was basically erroneous market
positioning. First of all, you know, gold made it to 1,000 before anybody even heard the word quantitative easing. So a lot of the gains from sub 300 to 1,000 happened before QE was even a public
policy. Well, these
policy.
predictions have been going on for a long time.
We have had a correction in this bull market, but I think it has to do with a lot of assumptions that are being made. Some of those are being shared by people on this panel, that QE is over and that the Fed is going to begin to raise rates. Neither of that is going to happen because the currency traders are not connecting the very obvious dots that if the Federal Reserve were to raise interest rates and end QE, it would bring on a stock market crash, a real estate crash. They would prick these bubbles. We would have another financial crisis. We would have a worse recession than the last one. And the Fed would come back with more QE than ever. And so since we're in that box, QE will not end. There will be no rate hikes. And the gold market will turn around when people figure that out.
And Peter, you know, that would be good for you because we know that you own a retail gold, a company that sells gold to retail investors, so that would be great. But, you know, what do you think about
a number of companies? But
a number, that's one of them. But, you know, what do you think about gold ETFs, paper gold as an investment instead of physical gold?
Well, it depends on how you're owning it, but I recommend that people have some gold in their actual possession. They can keep it at home. But yeah, for if you're in your IRA and you want to have it in your brokerage account, I have no problem with owning an ETF.
Rick, what do you think about gold miners right now? Do you think now is a good time to get into that sector?
I do. I need to tell you that the gold mining industry as an industry is an unmitigated disaster. The industry's worst wounds were self-inflicted, of course. The expectation for gold mining stocks was set in the 1970s in that great bull market. And what Wall Street rewarded was leverage to the gold price, which is a different way of saying that you asked the industry to be marginal.
Rick, I'm so sorry to cut you off, but that's all the time we have. We're going to run out of time. You guys, thank you, thank you, thank you. That concludes our very first panel discussion on gold. I want to give a big thanks to my wonderful guests. You guys were truly awesome. Peter Schiff, Rick Rule, Marshall Auerback, and Cullen Roche. Thank you, thank you, thank you. We love having you on. If you love or hated what you saw today, drop us a line. Let us know. Facebook.com/BoomBustRT. And please tweet at us and everyone on our panel as well. From all of us here at Boom Bust, thank you so much for watching. We'll see you next time. Ciao.